All right, stock market. We're going to look at the stock market, look at the SPY for the next few weeks. But first, I want to give you a brief replay from February 25th. That was 2 weeks ago, where I did a lesson in cycle analysis and did some projections on the stock market. I want you to see that again, and then I'll pick it up after that and show you the present analysis, which takes it from the point that I projected to 2 weeks ago. Take a look here as I'll move over to SPY. Now, what I want you to see here is this is of course, a candlestick chart. And on here we have a couple of indicators. This is the slim ribbon right over here. This is the slim ribbon PO, which is the signal indicator for the slim ribbon. The slim ribbon right now is showing you a negative condition, as it actually has basically since here it neutralized for a day and then turned negative again. And now you're getting this big rebound in here. And right now you can see it is still red and likely to turn down. But we're going to take a little deeper look at this analysis. What I want you to see here is that head and shoulders right there that actually signaled the top of the market in the SPY. This again is a daily chart of SPY, and we're going to go through the different steps in here of this analysis. So right now you can see that head and shoulders, and you can see that the momentum is actually negative. Let's take the next step in here and we'll put in our cycle brackets, because these are our guides essentially to the cycles in the market. These brackets are called our drawing tool called cycle brackets, and you can see there's a minor one right in here and a dominant one right here, and each of these is called a harmonic family made up of these minor thirds and the dominant cycle. And what we see is that when we get into the period where they're kind of nesting, there's a decline, and then you come out of the nest and there's an advance. Now you see these 1, 2, 3 cycles right in here. Well, this is how they actually formed, and you can see how that makes a head and shoulders. When this dominant pressure right over here is strong, it prevents this rally right here from making a higher high, and then it creates the head and shoulders. So that's just a little basic lesson in here. And you can see that there are 1, 2, 3 cycles in this big family right here, and 1, 2, 3 right over here, and here only 1 and 2. That is suggestive that you're going to see a failure of this rally at some point, and then moving down one more time. Now, this was a panic low right over here, and that came down and hit some important numbers, as I'll show you, and then you get this very significant rebound in here, and it's moving up into the slim ribbon. Now, often the slim ribbon is support or resistance, and this, in this case, it got a little through it and came down again, and now getting back up to it right over here, and this rally is likely going to fail and then get one more move to the downside right there. Let's take another look at it as we look at things a little more with a little more depth, and you can see in here those periods of risk. In other words, those periods where this nesting cycle comes in right here, and that you get your bigger declines, like the end of it there and there and there, and that would put you out over here. That means that the people that are buying right over here are likely buying premature. We had talked about a low sometime beginning in mid-March, and that's what this comes out to, sometime here. So after this rally is over, you enter into this period of risk and the next move to the downside. Now let's take one more look in here at a fully developed cycle chart with our analysis and projections, and you can see that right here. So we're looking at the reality of how the big harmonic family right in here traded, as you can see right there, makes a double top, does this, makes that head and shoulders that we talked about, hits resistance, falls off, has a rally to resistance, a sell zone, falls off, and then this last rally coming back up to the sell zone. Some important numbers as we look at this and advance it right there. The intermediate charts off the weekly have resistance, as you can see it getting right up here. The top of the minor resistance right there is at about 440. This right over here is at about 437. So you can see it's getting up towards that right now, and then likely to fall off for one more decline. Now, this is actually an important low. It stopped very much on this weekly support right over there and had this rebound. So maybe this period is only a test of that low, and then a significant declining phase that we had talked about for so long will be over with. Okay, now that you've seen that, let's go back to the SPY and look at the short-term view for the next few weeks and what I consider to be a bottoming process in the market. So let's switch over here. I have soybeans up from that previous illustration, and we're going to go to the SPY, and I'm going to blow this up and switch this over to that last bit of analysis that we did right over here. So what I want to show you is that, when we had talked about the stock market, whoops, that's not the one I want to go to. Here it is right here. That was the weekly. Here it is right here. So when we had talked about that analysis back over here, we thought that, this big panic over here would be tested and the market would come down again. It got closer on the NASDAQ and then is trying to move up again. So you'll note the green arrows that I have in here. These green arrows are the rising phases right in here on these big cycles. Now, if you're new to the cycle analysis, what I showed you in that replay might have been startling to you. But our members all are accustomed to this. And here we've gotten past this period of risk right in here and into what I consider to be the next rising phase, as you can see. But rising phases, when you get into markets that have negative momentum, and you can see the slim ribbon here, and on our weekly chart, we use the reversal scout also, and that one is in negative momentum. You get failures in the sell zones, and you got that right over here, and that's still a sell zone right there. Now, we have changed the harmonics slightly as this began to narrow. The harmonics were showing 12, 24, and 36 days, but they've tightened up a little bit now. That's very common to 11, 22, and 33 days. And now what we're looking at is our expected range right in here, which is the resistances right up over here, 1440, 1440, I'm sorry, 440, 445, and the supports down over here, which is around 420-ish, not quite getting down to these lows. So we expect that to be the range, but rallies are going to have a hard time holding with the negative momentum in all time frames in here. Still, we're in this area of this upside potential move. So we're looking for a move into the late portion of March right over here. If the market happens to sell off hard over the next couple of days and test this again, that doesn't change this analysis. All it does is put it out a day or so, because you can see these blue lines. That's the variance of the timing on the bottom. So we believe we're in a short-term bottoming period, and that it will overall, though I think very choppy and very wide swings, try to get up into these upper levels right over there, and then begin to move to the downside. And this period out over here into April is a lot of risk again, and there's a potential that this low right over here will be taken out very significantly, getting below the 400 area in the SPY. So that's the potential. If this cycle in here forms positively, in other words, it doesn't take out this low, it rallies and comes down and doesn't take out the low, that confirms that the intermediate bottom is in place. So this adds to the analysis that I did in that replay, came down and tested as expected in this bottoming area right over here. So we're in the bottoming phase right now, and Katie, who's in charge of our cycle bottom information, I'm sure is posting in here that we're in a bottoming area right now in this, and this is a place where what happens is that when you get here, often the velocity slows down. In other words, as you get in here, the movement starts to get more narrow, and then eventually, like you see right in here, a few days where it kind of gave you a cluster here, or a few days right over here, and then all of a sudden it starts to turn up. So that's what I would expect, kind of clustering right in here, and then trying the upside again. Right now you can see today it's moving down as the news that came out that moved the market up in the morning, that Putin said there were positive talk, that it had some positive momentum in their conversations between the Russians and Ukraine, but that's a bunch of hooey, and he's just trying to make himself look better because he's under a ton of heat. So the market's turning down again, but I really believe it's going to be kind of dancing around right in here and be in that range, 420-ish on the bottom, 440-ish, 445 maybe up in the top here into the next couple of weeks. And then that bigger risk area over there begins to come in, and we're just going to duplicate that. It's kind of out over here somewhere where that next period of risk is right there. So we'll be looking for the downward momentum to keep the upside from getting very far. The bottom pickers and those people that are, looking at these cheap prices to be looking to buy the dips, and that probably makes two-sided trade for the next couple of weeks with a good potential for traders, as long as you give the moves a wide enough berth so that you don't buy too soon or sell too soon in this pretty wide range of more than 200 points in the S&P 500 if you trade SPX or ES. Kind of what we're looking at getting into this period of rally. This is a likely temporary, as we still don't think that the ultimate low in the market comes until summer or fall, and that all of the upside attempts will simply be false. That is a look. I thought at this. I hope that you really thought that replay was very valuable to you. I'm sure a lot of people didn't see that, and I wanted to bring it back because there was such a good teaching piece in there, and then look at what we're looking forward from that point. And you get a good idea of the structures here in the cycle analysis. Remember that it's what we call the heartbeat of the market. It's really money flow looked at in a visual way, and you can see the rhythms in here are quite clear. Now, there are often shifts, movements, and our job at analysts to adapt to those. None of this is written in stone, and we're always reviewing, always. As you see, we have 4 analysts that do this on over 400 symbols, and I think we bring some of the best content around.
Hello, fellow traders and technical analysts. This is Matt with askSlim. Now is the best time to check out what's happening at askSlim. We are in the midst of our once-a-year premium services preview, where we hold an open house and offer free access to some of our most popular premium services. Just go to askSlim.com and click on the Sign Up Now button on the top right of the home page. No credit card is required. The askSlim PSP features an opportunity to access world-class, unbiased technical analysis, cutting-edge trade planning tools. You can connect and learn from a dedicated analyst team, all trained by Slim. You receive professional-grade trader education inspired by Slim's 6 decades of trading experience as a floor trader and screen trader. Our methodology supports most trading styles, including intraday, short-term, and multi-week swing trading. Let's take a quick look at some of the impressive services you will have an opportunity to utilize during this time. The askSlim SIR Intraday Grid Live Daily Chart Stream. This is broadcasted on a daily basis from market open to market close. It is designed for intraday traders and delivers key insights into primary intraday momentum, key support and resistance zones, and high probability acceleration zones for the S&P 500, the NASDAQ 100, and the Russell 2000. Next, we'll take a look at the askSlim S&P 500 multi-time frame chart stream. This is where you can learn how to apply our suite of custom indicators at multiple time frames to assist with determining directional bias, catching changes in directional bias, monitoring for extreme conditions, following momentum divergences, and identifying favorable trade setup conditions. We have a glossary and usability guides that are included, which go into deep detail around our custom indicator studies, and also suggested guidelines and best practices for this service. Next, we'll look at our askSlim trade ideas. Trade ideas are specifically designed to support your trade planning. We believe trade planning should be a critical part of a trader's process. For this reason, each trade idea is accompanied by our custom weekly and daily charts and includes a template including many of the most essential components of a trade plan. Each trade idea will highlight favorable entry ranges, target zones, and suggested price levels where the idea would likely need to be reevaluated. And finally, I wanted to highlight our new askSlim cycle timing service, which is now in beta. We're really excited about launching this new service. Our askSlim methodology is a unique technical style that blends cycle analysis, momentum analysis, and swing high, swing low techniques. Because of this analysis, we are able to offer projections not only in time and price, but also in direction. Being able to project in time is a core aspect of our cycle analysis and the askSlim methodology. Finding and timing the next key low is, as everyone knows, no easy task. With the askSlim cycle low timing service, we increase those odds greatly. There are often opportunities surrounding the bottoming of cycles as well as the nesting of cycles at different time frames. Our new cycle low timing service is an essential tool in the askSlim arsenal, and it's designed to help our members identify and manage the risks and opportunities associated with lows that happen. That's all I have for today. Make sure to go to askSlim.com and sign up for our once a year premium services open house preview. I'm going to bring over the home page right here. You can click on this green button to sign up, learn more about all the various services that are available. And once you feel like you're ready to go, just click on the sign up now button, and that'll take you to the form that you fill out. There is no credit card required. That's all I have for today again, and I wish everyone all the best and great trading.